The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the Wednesday edition, Wednesday, September the 12th. Wednesday the 12th. I only wrote it about 10 times already today, but we just move on. So, great 2 hours, of course, 9 till 11. I come on 11 o'clock till 12, except today I come on 11 o'clock till 1, because I'll be doing Larry's show, just as I did it on Monday, and I didn't expect to do it on Monday, but just at the last minute, because we have this wonderful technology called the Internet, etc. I was able to do a bunch of things online during the show and managed to do Larry's show. And I'll be back tomorrow at noon. That's right, Thursday at noon for the Commodities Hour. Commodities Hour. We will see, in fact, at about that time, whether the dollar has had a reversal and commodities have had a reversal. Wouldn't that be interesting? All right. Important day. We had the German minister come out and say whatever he was supposed to say. We kind of knew what he was going to say. We got Apple coming out, and they kind of going to say what we expect them to say. We got the Fed coming out tomorrow, and they're going to kind of come out with maybe partial of what we expect them to say. And I'll explain this right now. Let me just run the numbers so we can get it out of the way. Dow's up 21 at 13,344. S&P's up 137 at 1434. Comp index is up 3 at 3107. Gold is down 2 now at 1732. Silver's down 61 cents at 32.95. Platinum's up 30. That's huge. At 1636. High-grade copper has been spectacular. It's now at 369, stalling a little bit, but it's had a fabulous move. Crude oil is down. It's at 97.04. Bonds are down over a point. So when you put my three horsemen together, let's start off with that. Come on, today's the day we've got plenty. Oh, I thought I typed that into the den. I did not, so I'll do this right now. When I'm looking at the volatility index, you remember our three bears, VIXY, Bondi, and Dolly? Well, it's interesting that the Dow has made, and the S&P, the Dow and S&P have made new recovery highs, but the low of 13.30 that was made in the volatility index the other day, that was the 17th of August, yesterday's low was 13.97. No, 2 days ago, that was 39.7. Yesterday's low was much higher with a higher high. Today's slightly lower low and slightly lower high, 1543. I would say that the volatility index is sitting there saying, be careful, because if ever there was a moment for a surprise that would not be to the upside, this is it. And thank you, Al. It's the Futures Hour I'm doing tomorrow. I call it the Commodities Hour. We include commodities, but it's called the Futures Hour. And when we're looking at the chart that I'm showing right now, in the context of the monthly, maybe we should do the weekly first because we're in the middle of a week. Put it into the weekly context. I love this. You've got the pattern that I call the dreaded H, 1330. In fact, you know what? Because I intend to have a live 2-day workshop. These are patterns that you're going to have to learn, that you want to learn. It's very important. Patterns, it doesn't matter. I'm looking at the volatility index. Let me show you something. You see this chart right here? Not that chart, this chart right here. This is what I send to my subscribers every single day. I show not this particular chart, but an incredible. See those little panels underneath there, 1, 2, 3, 4, 5, 6, 7. Every day I send 5 to 7 charts out. I had a real quick question from someone in the den. Is it going to be a level 1 class? This is going to be a level 1 class. I do intend to have another level 2, which I've had every year. I've had some people come back for 4 or 5 years, even level 3, in fact. And that's just based on the Chapman wave. There are certain patterns, there's certain things, there's certain methodologies that just need time, there's nothing really complicated, but it's like any new stroke that you're doing, say in tennis or golf or whatever. You don't get it the first time, or you might get it the first time, but you won't get it the second and third time. You need to practice it so that you can be assured. And that's it. And yes, I will have that. There are a couple of people who have asked me about it. I'll talk about that soon, but nothing yet has been decided. That will be a level 2 for the more advanced Chapman waivers. So now look at this. We're talking waveform. Do you see the big arch in this? You're looking at Tiger TV. I'm showing an arch. It's usually a blank chart. Now my subscribers know. It took a while, but I used to always fool them and say, look at this chart, and I'd show the chart, and I'd discuss the chart and everything. And then I'd say, this is a chart of the Dow upside down. Why do I put it upside down? Well, in my Master Trader series, one of the first questions I ask everyone is I say, do you trade better on the long side or the short side? I sometimes get a very quizzical look from people saying, well, what are you talking about? Well, I know that for me, in the futures that I trade, the E-minis, there are times when I just identify in a certain direction over and over and over again very comfortably. And the other one is where I have to work a little hard, I have to do a little more analysis. But it's because of my mindset. My mindset's up, but the charts are going down. Or it says it's going down, my mindset going up. So you have to differentiate between a chart pattern. You remember Larry's show that I'll be doing this afternoon at noon Eastern Time called Trade What You See. You want to look at the chart and let the chart tell you. You do not want to tell the chart, because I got news for you. You can tell the chart, and I just don't think it's going to hear. Let me see, are there any ears? Oh, yeah, you know what? We can put a couple of ears, put a little ear over there and a little ear over there. There are no ears on the chart. They don't hear you. Now, a Lorentz dance is upside down to make us cross-eyed. No, no, no. The cup pattern becomes an arch pattern, and everything that pertains to the Chapman wave cup pattern formations, the inside wedge, the left side, right side, price, time edge, blah, 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 applies to the arch formation. And look, we just did another one. And what I showed subscribers, I don't usually show them in this frequent sequence. What I show them is this chart, and now I tell them exactly straight away what it is. And on this chart I said, Fed, question mark, Schmed. Bunds, question mark, Schmunds. Rather, we will look at this inverted Dow chart and tell, pertaining to the Chapman wave methodology, what is the pattern to be anticipated? Well, the large arch could become a small M pattern. Look, a large arch becomes a small M pattern and fails. That's what happened earlier on. As the left side lows are tested, an immediate slide to a lower low bar that reverses back up would revisit the arch. So what I said is, if there's a slide below the left side low bar, in this case we're talking upside down, so we're talking about 13,330. I prefer 13,338. Well, lo and behold, yesterday we went below it, i.e. above it, and we closed right above the 13,330 previous high. Remember, I'm talking upside down. And that says, be careful, because there's a chart pattern in the Chapman wave that says, if you slide right through, but then you come back and revisit the arch, it means you can stay in that arch just a little longer before revisiting to retest. But if you close, and that'll be today, if you close decisively below, in this case, 13,330 in the Dow, but I really want to go back to the 13,338 level back in May the 1st, close decisively below it, it gives a whole different reading on what the end result could be based on the Chapman wave. So now look at this chart. If you look at it upside down, this is the Dow. If you're looking at the way it's shown right now in Tiger TV, darn, why didn't I do that? Tiger TV, what you will see is a huge arch formation that failed and kept going down. And there was a dash trend line resistance, the left side, right side, price, time edge that broke. It goes down to a low, and then it has a very strong rally, goes back into the big arch above the previous support, which became a resistance for a moment. Then it comes back and retests and makes another arch formation. Yeah, it's not a perfect arch, but it's basically an up and then a down pattern. even a V-shaped pattern. And now we are testing the left side lows. Now, if you go to the CD introducing the ChapmanWave methodology, you will see that I talk about the arch formation. And that arch formation says that you can go up, there's a measured move, and it shows the left side, right side price time match with an inside wedge. Then there's another pattern that is really important in my work, and that's the pattern that I call the dreaded H. It's just simply a lowercase h. And the thing about this particular pattern is that in the pattern, it tells you what happens. There's three things that can happen when you test the left side low bar. And here it is. Actually, this is the one I wanted to show right there. The dreaded H pattern, this is the US 30-year T-bond sell mode, which went, this is way back from August of 2005 when it was trading up at, down at, well, and it hit 118 and it pulled back all the way to 109 and then bounced. This is the pattern I'm talking about. Look how easy it is when you can just take your your lines, your arch or left side, right side curve, and your straight lines, the diagonal lines. Look, there it is. That's the pattern that I describe, and I'm going to describe it now once again. If, in fact, right on the cusp, on this very important support line, there is a decisive break with a down close way below the left side support, it's saying that the downside momentum, unless the stochastic and MACD, if you put the technicals together, become really strong, giving you a brand new buy signal. Of course, it would be a sell signal since it's an upside down chart. Let's go to our major chart so I don't confuse everybody here. So we're going to go back to the chart, get rid of this, get rid of that, and we'll go to the Dow. It's all related to the volatility index, but I need to do the package so that you can see what I'm talking about. Well, that's the package with all the technicals. Why do I say technicals? Because the MACD and slow stochastic are added. I consider that really important. And why do I consider it important? Sometimes I like to do the naked chart, like I showed you there, with nothing but the no moving averages or anything, or maybe a 9-period moving average, but nothing of major consequence that would interfere with the look of the chart, and just trend lines. They could be parallel lines, they could be anything you want, but mostly what I'm looking at would be lines that indicate to you that there is, in fact, there is a confirmation of the pattern that you're looking at. Now, this is a weekly chart that I'm showing you, and that weekly chart says that the stochastics at 89% and the MACD is still very good. Not great, but very good. So on a technical basis, any pullback that I see coming up right now would be of short-term derivation, unless the pattern that we're looking at, that cup formation, remember it was the arch in the white chart, unless that decisively takes out the low of the 4th of September, 12,977. Those are the parameters. Very easy. I'll be right back. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Got a full show today, just a chunk of stuff to look at, and I always expect to get calls, so anytime you want to give a call for a stock, 877-927-6648. Now, let's just go through this. I talked about the Dow. I said why it's important to this particular level for certain things to happen, characteristics that I articulate both on my CD introducing the ChapmanWave methodology. I show my subscribers every single day. I explain it based on the technicals. I base it on what I call the naked chart, just a bare chart with very little on it, so you can really see it clearly, make up your decision about the weight of the evidence. Sometimes it's the number of white candles, sometimes the number of black candles if it's a white background, etc., or green and black if it's on my black background. Now, what we're looking at is if I go to the volatility index, you can see, based on the weekly chart, and that's how I got into this whole thing, there's that pattern that I call the dreaded H, with a little arch formation forming right now. Do I care that it's a volatility index and it's not the New York Stock Exchange or Apple? No, it's just a chart. I'm just looking at, incidentally, I'll show you the Apple chart in a few minutes. Look at this. You went from 13.66 on the last low bar of the week of the 16th of March, ran up to 27.73. That is huge on percentage basis. It doesn't always make that big a difference. It's the direction that counts. Failed to hold above 20, went under the 200-period exponential moving average, which is at 22.72, and kaplop. It came down to a lower low, 13.30, and it closed at 13.45. Well, 1345 is a close below the 1366 level. So unless the technicals, namely, you've got to go to the daily chart, unless the technicals are superb and up in the stochastics up in the 93 or 95% area to really trigger a new buy signal, you have to say, okay, based on all the evidence, the volatility index might just remain in this area, because until it breaks the low of 1397, the low of just 3 days ago, you've got to anticipate that there's just enough weight, that is momentum to the upside, built on the torque that it took when it went from the 14 area, 1397, in 1 day to 1628, enough torque to kind of push it higher. So I like to talk about the weight of evidence. So that says that until or if the volatility index can break into the 17.80s, this is 16.10, to the 18.30s to reignite the power to take it towards the 1957, I was just to say 1957 Middle East crisis. Somehow that seems to ring a bell. No, 19.57 high of the 200-period moving average, which will be above peak C to make a leg D above 18.97. I have to say the weight of evidence so far says that the volatility index is kind of benign. Based on the pattern we're looking at, because it made a low, it's going to come back and retest close to it, to the 1330. Well, it went to 1397. Great. So now I look at the MACD and stochastic of the weekly chart and I say they're very wide. The distance between them is very wide. It says that if there's a rally from here, the MACD might not cross very positively, but it might cross positive enough for the stochastic and for the VIX on a shorter term basis. That's this middle chart we're looking at here, to rally and retest those highs I was just talking about of 1896, somewhere between 1880 and 19.57, that 200-period moving average. That's what it says, but we don't know yet. So we jump over to the monthly chart, and the monthly chart says, hey, wait a minute. That volatility index is still under the 9-period exponential moving average. I'm just going to say until September is finished, I'm not going to discuss the volatility until or if or unless it breaks above 19.06, which will be above the 9-period moving average for the very first time since June of this year. And that was a terrible candle, because right to the close, almost the close of June, it looked like it was going to be a fantastic volatility index green candle, meaning markets going sharply low. That was a test of 12,000, I think. Instead, what happened? It reversed a couple of days or a day or two before the end of the month and closed at the lows. And that says that volatility index so far is a boost for the market. So let's go to the dollar, DXY. The dollar on a monthly basis, I'm just going to put it up to show you it's made a peak D. It's pulling back under the 9-period exponential moving average. Stochastic still okay at 80%. The MACD is still quite good. So we have to wait till the end of September. Now we can go to the weekly chart, because although we're in the middle of the week, there's enough evidence to say I've been talking about the dollar targeting the 200-period exponential moving average in the weekly chart of 79. I think it was 87. Well, the low so far this month is 79.52, made today. And we'll go on from here. We'll talk about the three bears, the volatility index, the bonds, and the dollar. We'll talk about the euro in a moment, and I'll probably do much more of that in Larry's show. But in the meantime, call me at 877-927-6648. Does up 34
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, folks, I actually feel a little silly doing all this because tomorrow at 2 o'clock, all the discussion could be absolutely nothing because we will have resolved our final, it'll be the Fed speak, and Apple will have given out their news. I'm going to show the Apple chart in a moment. I'm just going to tell you right now, the EUR USD, this is the currency. Where am I writing that? Oops, the wrong place. Over there. Sure. Sometimes these things get away from me. EUR USD. That's the 10-minute chart. Didn't mean to do that. Let me get rid of this futures chart. We don't need it right now. I need to go to other charts. Now, I do want to discuss the futures chart. So we're going to go to the EUR USD, leg D up. Now, some people had questions about the notation. It's very simple in the ChapmanWave. I like to be as conservative as I can to get to a D as quickly as possible, and for that D to at least give me a heads up that now we're about to we're at a point, an inflection point, a deflection or an inflection point. The way I describe it in my CD introducing the ChapmanWave methodology, an inflection point is that, for instance, the MACD sometimes, if you're looking at the chart now, this is the daily, it's very stretched out, it's the EUR USD currency pair, euro dollar, US dollar. Now what we're looking at is, you see the way you see over here, let me bring it out. See the way the fast-moving average, the yellow line, deflected away from crossing the red line, the slow-moving average? Now look at then it inflects, it breaks through, and now it deflects again once it's above it, and it's continued and it's held all this time, that fast-moving average. If you just held onto that fast-moving average, if it takes a lot of gumption, a lot of patience. I've tried my absolute best to do it. I think we're doing way better now. We've taken losses of like 1% on short positions, 1% on $156 stock as we had in Panera the other day. To lose 1 point, that's like not even 1%. That is amazing, because I'm defining risk way better. At least I'm trying my best to define risk way better. So in this particular instance, if you had the gumption, even on the 30th of August, when it looked like it was going to break the 9-period moving average, the euro, but that fast-moving average was holding steady, and that's what we'll be looking at right now. So it's gone to a leg D. So it went ABCD to new highs to 12, 1.25888. That was on the 23rd of August. It pulls back for 2 bars and then walks the 9-period moving average with a parallel wave count that I called E/F, F/C, and then it goes to G/D. But that's also beautiful, because that confirms the alternate count, the conservative count, that said the high of 1.26270 on the 28th of August was in fact a wave count. Usually it would be gray. I'm making it gray right now. And that's the way it goes, A, B, C, D. And that's what I was discussing with my subscribers this morning, that the euro had gone to D. Now look at this. So it's gone to D. Remember I spoke about that 200-period exponential moving average, which meant nothing to us up until just recently when we were getting closer. And what I'd said is that line becomes a magnet line. Why? Because it's an internal-looking indicator. It's you can subscribe to the indicator because it's saying within the makeup that I have, the 200-period look back made up of the different moving averages within it says that it applies only to me, the EUR/USD, at this particular point. The 200-period look back says, finally, we've come to zero and now we're in plus position. That is very important. Like the 9 EMA, that puts the greatest weight on the last close, look back period, 9 periods. In this case, 9 days. Look how it's holding at 1.272. So that's your benchmark. Any close in the next week below 1.27, and all of a sudden you've got a top that says consolidate until there's a retest of the 200-period moving average of 1.284. Any further move up says it doesn't matter how high you go, unless you really go above 1.31, you're probably going to have to come back and retest 1.284. That's the way I like to look at these different things. They're telling us, they're giving us information. Besides which, look at that beautiful cup formation and breakout. This is not a cup and handle. This is a ChapmanWave cup and ladle that says, great, because now you can go above it to peak D. Well, it goes to a D right now. It says, yeah, you might be able to go to an ENF, but it's telling you very clearly the pattern with a stochastic at 92% in the MACD still strong. Don't be shorting this unless it's a very quick short-term trade, because the strength is starting to build on the upside. So the trade would be that it starts to fail in the weekly by breaking under 1.227, and then you're going to see the weekly make a peak B next week if there's no new high, and then that weekly, the daily has an up channel, the weekly has a down channel. It needs to break it decisively to get to 1.34, the 200-period moving average on the upside. That's the way I want to describe it. So now let's just go back to what I was looking at. I said Apple. When you're looking at Apple's charts making a leg D, a possible 682.48, 683.29 new high this week. So it's still leg D in the weekly, gone above the up channel. And it says if the GLD is an example of channels breaking to the upside, having to come back to retest the inside and then going back up again, this is going to be one to watch. Now let's look at this. When I was interviewed by Tom last night, in the weekly interview, I said, I've got a leg F, probably a peak F being made up right as we spoke, as a confirmation of a pullback. The technicals in the weekly, in the daily are very poor, and it says that unless Apple comes out with something spectacular, you see, we're looking at three coincident areas of conjunction here. If Apple cannot break above 683.29, oh, it might make a double top. But if it fails and instead it slides underneath 648 was the low of the 22nd of August, it says Apple has made a short-term top going from an immediate sell signal, which it'll give today if it closes anywhere around here, to a sell mode in the daily. I have no signal yet in the weekly. I have to wait all of next week to see if there's a lower high bar. That's why it's so important. What I do in my Master Trader series is I go through these time frames in great detail, because you remember way back when I got that major buy, I got a buy signal on the Dow the day of the low of March of 2009, the 6th of March. At 66.50 or something like that on the DIA. And then I said, I'm absolutely sure we're going to have to come back and retest. But then the daily started to build and build, helping the weekly chart. Suddenly the weekly chart improves. Then suddenly the monthly chart improved. And I stayed in that trade. We stayed in the trade for 18 months, I think. That's the way you want to use time frames. And all I'm saying here is I do not have a signal yet for the weekly. But the weekly is saying from the technicals that if there was a pullback, I have to consider it just a rectangle pullback to about the 540 level over a period of weeks and maybe even months. At first, I just don't know. The daily is the one that leads me to get that sell signal in the weekly, because that'll say next week is probably going to close under 643, which is the 9-period moving average support. If it does that, suddenly I might have, if the stochastic has pulled back under 80%, I might have a sell signal. Then I have to wait for the sell mode as the MACD crosses negative. So you can see it's very important to look at your time frames. Now, momentum trades. I wanted to quickly talk about momentum trades, and then we're going to we'll go to Neil in Denver right now. Hi, Neil. How are you?
I'm great, Basil. How are you?
Very well, thank you.
That's good. I just wanted your opinion on the NDX. Wanted to see where you were on the weekly and the daily.
Do you want the NDX or the Qs, which is the trading vehicle for the NDX?
Actually, just the NDX, if you could.
All right. I asked that because I just knew that when I went to it, I had lost information. I'm not going to go into it now. I thought that it had improved, but I seem to be losing information. All I can say is that there's a chance that this is new leg C up in the monthly. Let me just do this real quickly. There's your up arrow. I'll be 1 second. You'll see how quickly you can do the ChapmanWave, and then you'll see why there's, at some point, if things are still very strong, you can get a potential for an alternate wave count. Nope, there's no alternate wave count. This is A, this is B. I have to tell you that my monthly chart is in leg C. At this point, maybe I did a little too quickly. I don't see any reason why I should change that. Nope, I don't see any reason. There was a peak. Okay, here we go. Folks, if you're looking at the Index 100, this is the top 100 stocks in the NDX, the NASDAQ index. The Qs do exactly the same thing. They trade off the NDX 100. The low that was made November of 2008 at 1018 had successively higher peaks, peak A, B, C, pulls back sharply April of 2010, goes under the 9-period exponential moving average for 2 out of 5 bars, and then boop, goes right back up, and it goes to D, E, and F. That's the only way I can count that. There's no instant restart, no nothing. At 24.38 in July of 2011, it pulls back, makes a low of 20.34, bounces, tested at 20.42, so that's higher, so that can be a peak. That's peak A, October of 2011. Peak B at 27.95, April of 2012, holds the 9-period moving average. We're in leg C. This is very positive and says that, I can't believe it. It says the NASDAQ should be going higher for the next couple. Well, we could pull back very sharply and then make D, but it says that the monthly is still bullish, still very positive. The weekly is A, B, C, D, pulls back, A, B, C, D. We're in leg E, and it's at the double top potential, so I have to quickly look down and say, the MACD is at 94% and holding steady. That's very good. So let's go to the daily, and the daily is way choppier because the daily is let me just double. I always have to go back to the low slow bar. So let me choose this. Folks, if you're watching this, this is basically This is the simplicity of this particular technique. Where does it get complicated? It gets complicated when it recycles. So that, in fact, could be E. In fact, I'm doing a little work now on the pattern that says, what do you do when it's a potential E top, but it doesn't make a new low and it recycles higher? And this did not do that. So that's an E. This is a very clear A. Now we're going to go B, C, and we're at D. Ha! That was quick. Daily, weekly, monthly. So the daily says we've made a peak D in the NDX 100 on the daily at 28.29 on the 7th of September. We've pulled back to the 9-period exponential moving average. And what it also... so this is the count that I have. So your question pertains to what?
Well, I was interested in the count on the daily side. You say you've got a peak D or a leg D?
I've got a peak D already established with the MACD confirming that technically I should put a down arrow because the MACD is negative and the slow stochastic is only at 65%. I tend to say I want a decisive close under the 9-period moving average after that to go from a plus sign, which is what I normally put on a D, either up or down, to go from the plus to a down arrow. So I'm going to be a little conservative here. I'm going to say I have a potential sell signal. I absolutely have it. I know that from the Qs, that I have it in the Qs on a 120-minute chart. I've already got the sell signal to sell mode, and the daily, it's exactly the same thing, obviously. I've got an F/B in the daily of the Qs at 69.55. Now, what's really important about this pattern, it says, you know, we often get a call from British Columbia, and the question is this a head and shoulders top or bottom? And, in fact, what we're looking at here, this could turn out to be a head and shoulders top. The 68.88 left side high of 20 on the 21st of August at 68.88 went sideways, popped up for one day to the 69.55 level. Let's give most of that back. Now we could be making the right shoulder if it doesn't break decisively over 69.50. And even then I have to think maybe there's a double top formation. At this point, to tell you the truth, if I wasn't looking at any news, if I wasn't listening, I did that for 3 weeks. In my office, the TV I had just kind of blew up, and I got a new one, and I didn't connect it for 3 weeks because I said, you know what, I'm not going to listen to CNB. I'm not listening to anything. And I found it. I'm going to go back to that. I found it was fabulous because I ignored all the noise, and I got the trend based only on the waveform. And if I do that right now, the waveform is saying to me, there could be a high-level consolidation in the Qs. It could actually go to a new high. I'm not sure it can, but it could, because 70, somewhere in the 69.80 to 70.30 area, I could see some kind of resistance there. But more likely, there could be a trading band that says you could go sideways as bonds go sideways for a little while. Dollar tries to rally, euro takes a bit of a breather, and there's this. That's what I mean by this inflection point. This is what I mean by we're cusping right now, because so many of these indicators are saying we're kind of a little, we've worked real hard. I don't care what the news is. I've got a V-shaped pattern in the weekly chart of the Qs, and that usually says you've got to snap right through it, because if you hesitate, you're going to be pulling back. So my answer to you is, you know what, hold on. I'm going to give you an answer with a little more specificity to your question of the NDX as soon as we get back.
Great, thank you.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and we're back with Neil in Denver, and we're looking at the NDX 100, which trades the Qs trade off the NDX 100. All I can say is this: if the NDX 100, which is trading at 27.88, up 3.75, by tomorrow at 2 o'clock, is underneath 27.57, there's a real good chance it's going to retest the low of 27.44. If it has a high-level consolidation, and in fact it does not break in between now and tomorrow morning underneath 27.74, but in fact what it does, it tries to push towards the 28.08 area, and at 2 o'clock tomorrow, or 2:15, 2:30, or something like that, 2 o'clock, 2:15 is when they go. At 2:45 tomorrow, the NDX is testing the previous high. Then now we're going to watch this real closely for a potential double top, and the only reason I say that is that I've got a peak D in the daily. I've got in the IWM, I had a question in the den: what is the wave count of the iShares, the Russell 2000? And that's in leg D now. The technicals are still very strong, so it is how we are going to the close tomorrow and into Friday. That's going to be absolutely important. Why? Because if we have a very sharp pullback, I've got Ds and Es all over the show. I've got some stocks that have made round numbers, and if they don't break those round numbers in the next few days at their highs, they're going to be pulling back. The RTH is another indication. So those are my parameters, and I will be doing a Larry show tomorrow, Thursday. I'll go through this again. But that's it for now. So I hope that helps you, Neil.
It does. It does, Basil. Thank you.
Thank you very much. Let's go to Max in Tri-Cities, Washington. Hi, Max. How are you?
Doing well, Basil. Good to hear from you. Good to talk with you.
Good to talk with you.
Got a question about AT&T. Ticker symbol T is in Tango.
T is in Tango. Right.
Yeah, back on like April 26th, looks like it broke out of a horizontal channel, established a nice up channel there. Was wondering if there was a ChapmanWave developing. If so,
absolutely.
Where's the wave count?
This is just, I've got so many examples of this that I have to say to you. Thanks for bringing it up. I had actually looked at it just glancingly earlier this morning. I thought, okay, with Apple and all that, I may as well just have a quick look. But I didn't have time to do any wave count or anything other than what I'd done already, which took it to a leg D as we're talking. So this is very important. So AT&T, do you have this? Is it just a question, or you actually have it in your...
Yeah, I've actually got some December 38 calls. My cost base is 88 cents. I'm already in the money on it. It's trading like $1.04, something like that. So, I passed my break-even point and was looking at, I'm trading the up channel, but I'm also trying to understand the Chapman wave.
Well, what I'm going to do, are you looking at Tiger TV right now?
Yeah, actually I am.
Okay. So what I've done is, this is the daily chart. You see the cup formation. Remember in my CD introducing the ChapmanWave methodology, I was talking about these different patterns, and I spoke about the cup pattern. This is the cup formation right here. This is the cup formation, very detailed, left side, right side, price, time match, etc. Hey, have a look at this. This is exactly what we're looking at here in the daily chart. So 38.28 was the high back on the 1st of August. It pulls back to two beautiful dojis, a silent doji plus a regular doji on the 23rd of August. Starts a brand new up move, very gentle. And what does it do? It's within it's within 3 days of testing the left side, right side price time match of 38.28 and the high already days 38.11. Besides, this is a dividend stock. You're not going to be involved in the dividend because you've got the options. But many people are looking at this as a form of putting your cash where you can get capital appreciation, this spectacular capital appreciation, plus the dividend. So are you able to stay on for the next hour? I'm doing Larry's. Do you have time to do that?
Yeah. Are you on for another hour?
I'm going to be doing Larry's show in this next hour.
Yeah, I can hold on.
Great. It's a great stock to talk about. I know a lot of people have it, and a lot of people would like to look at it. Folks, we'll be back in the next hour for Larry's Pesavento show. And don't forget the Tiger Dollars. Oh, go to the front page. Check out those Tiger Dollars.
Are you looking